On. Let's jump in. So first of all, thank you so much for everyone's time. I know everyone has been taking a plethora of webinars and CE courses and otherwise. And today I think is most relevant. We've been doing a continual series now going back to the beginning of April and just sharing our candid observations from the hundreds of files we have now throughout all continents, all aspects of the continent and all corners of the continent in terms of sharing what we're seeing from landlords, strategies now, and look forward to answering a lot of the questions that I see coming through based on those doctors who have made all rent payments thus far or those who have not, those who are now have been reopened now for a couple of weeks, and obviously those in some areas of the country and state that have not. So looking forward to a great interactive seminar today and looking forward to help sharing some best practices, what we're seeing, what some of the challenges are, what some of the, in some cases, absolutely unbelievable tactics that landlords are doing to make life very difficult for the tenants that, it's just, in some cases, it's just unbelievable, especially with some of the rent abatements and deferrals and making major material changes within the leases. So looking forward to sharing and just sharing a good candid review as we look forward now to reopening post COVID-19 May 28th update. My name is Eric Pook. I'm the Managing Director here at Cirrus Consulting Group. For those of you that have not joined one of our webinars in the past, welcome. We've had incredible support for some of our large enterprise partners and otherwise, and looking forward to sharing some good processes on the business side of dentistry and learning how to leverage things like the Dental Office Lease and why now is such a great time to negotiate or renegotiate your dental office lease. So why? I think to help better explain how we can be of assistance and why we can be of value, it's important to know a little bit about the firm. So at Cirrus, for those of you that haven't heard of us, we are really the only healthcare tenant specialized firm of its kind in North America. So very unique. We're hyper specialized. We've done over 12,000 successful lease negotiations. Our team is principally dental focused. So that's it. That's all we do. And we were founded 26 years ago by a group of dentists looking to help to protect themselves, knowing that the group of dentists as an occupation were in many cases being taken advantage of by the landlords or brokers or otherwise. So someone to be specifically focused to represent doctors through their largest financial commitments, the dental office lease. So from that perspective, we're pretty unique. We have an in-house legal, leasing, consulting departments. Right? We're doing a plethora of these continuing education courses. We are also focused on representing hundreds and hundreds of doctors throughout North America each and every year. Quite frankly, we've had more doctors retain us in the month of April than any other month in our 26-year history. So the word is out that we have found a bit of the key winning techniques to be able to leverage two challenges today. One is there's a short-term capital preservation exercise. Cash is king. COVID has thrown something that we never thought we'd see in our lifetime right onto our plates. And now we have to figure out how to be smart and how to not only survive through this, but to also thrive. And so we've been able to negotiate twofold. One is we're able to deal with some of the short-term rent abatements and deferrals, right, to make sure that whatever we've agreed upon with the landlord is properly documented, which we'll spend a lot of time talking on. And then secondarily, the next major component is then, especially those whose lease is coming up for renewal, what we're finding now is landlords, by and large, are very anxious and are looking to secure long-term deals to help shore up their financials, especially as many of their tenants are coming from are either defaulting, missed payments, cannot pay, restaurants, bars, etc. Many are in significant financial challenge. And now the landlords are in positions that some never thought they'd be in. So there's going to be a lot of change. In my view, things are going to get from the landlord and real estate perspective is going to get worse before it gets better. So let's talk about now on the positive, how we can help to navigate this. And over 26 years, we've been the guiding hand for dentists, let it be through 2008 or September 11th, or through some of the booms and busts throughout all the way through Y2K. We've really seen it all. So looking forward to sharing some of those best practices and help to share that, look, you're not alone. We have are specialized in helping to ensure that whether it be a default notice, that we've seen a lot of them lately from landlords saying you're closed and therefore we found you in material default per the continuous operations section in your lease, right? Or those that have basically been contemplating selling before and now contemplating walking away and realizing that they can't without demolishing the space and returning it to pre-dental condition, adding insult to injury. So looking forward to sharing a lot of components on that. As well, many of you, hopefully I've met you at either the Greater New York or the PDC, the Yankee we were at this year, California Dental Association, that obviously we've been prominent boothers as well as speakers at many of those events as well. So let's jump in. So these three numbers, I love to start the conversation based on this. So three key numbers, 85, 54, and 80. So what do these represent? Well, first off, that may come as a surprise, for those of you that are looking to transition in the next 5 to 10 years, 85% of dentists have a lease that can prevent them from ever selling their practice through the assignment and subletting section. Number two, 54% of dentists are overpaying in rent in their practice. And just got off the phone with a Manhattan doctor, prominent dentist that is just got proposed a 30% increase in rent in and amongst COVID, in and amongst everything we have. Again, it's just unfortunate and devastating in some cases what some landlords are doing. And last but not least, as in this lease and others, 80% of landlords structure the lease to give them a right to at least 50% of the practice sale proceeds. So fantastic. So I see some good questions starting to come in, which is really where we're starting today. So really a couple of the purposes today as we're looking at it are a few things. Number one is some Q&A. So why don't we start with this? Let's start with a polling question just to get a quick geographic background here. So number one, if we're able to pull up the poll, just to denote where everyone is coming from a geography perspective. Let that be Canada or the US. So it should be up there now. So two questions in front of you, just to, again, align our content based on whom we have on the webinar today. So location, Canada versus the US. And number two, have you made all rent payments to date? We'll take a quick moment, again, those of you on the app or otherwise. And I'll get everybody to submit that. Give it another 10 seconds. Okay. Fantastic. Okay, good. So interesting cross-section between doctors attending here throughout the continent. And then interesting that a good portion of you have not made your total rent obligations thus far. So that is obviously our candid guidance is always to do our best to make all our commitments within any agreement, especially the lease agreement, because if not, that means a whole host of things that could be detrimental for our reopening strategy if we are in fact in default. So from that perspective, the vast majority, well over 3/4, have made their lease payments to date, and a large component that have not. So let's look on both sides. So for those of you that have made your rental payments all on time, that's great. That doesn't preclude you from a negotiation aspect. Quite frankly, I think it's also a benefit because you're one of the few, I'm sure, of the tenants in your mall or strip mall or otherwise or building that is up to snuff on your rent payments. For those of you that had not, very important that we want to be strategic in terms of how we handle that, because it is a fine line. And we'll touch on default, we'll touch on the impact that has as well. And also based on the geography, looks like a good portion are US bound, and then some are north of the border. So we'll share some good best practices there. All right, so I see some questions coming in. That's part one. So let's have a little bit of an open forum rather. So again, for those of you that have just recently joined, there's a Q&A section. Feel free to add that in. So first question came through here. My question, how can you negotiate a lease with my landlord? Do not have a lease today, which is hard to reach. And if the attitude is you want a lease, I will double your rent. So interesting. So I think the question here, Adrian, is that if you are an existing tenant today, but you don't have a lease, or if you're in a month-to-month lease, then you and your business are heavily exposed. We'll touch on a number of components on that today, that the lease really becomes either the rock solid concrete foundation to build your practice upon, or it can be a crumbling shell that can cost potentially hundreds of thousands of dollars down the road if forced to relocate, or if the landlord has a demolition right in your lease or otherwise. Can be very difficult. So it is, again, of critical importance that we do have a lease in place today. So that's the first piece. If the landlord's attitude is, if you want one, I'll double your rent, that does sound pretty rare. However, at that point, the question is risk. And if you don't have a lease, then how are you going to sell your practice? Or if your lease is in poor repair or has never been professionally negotiated, then how can you sell it? If you talk to any of the practice brokers or otherwise, some of the main components that they'll say is the number one reason why a deal dies and the inability to sell a practice is due to the fact of the lease. Right? So it becomes very important that the lease is properly structured to allow for sale. And if in the event the landlord has been difficult or is being subversive, if you will, then again, we deal with these type of scenarios all day long. There's a wide variety of technique that we can talk about getting them back to the table. So we'll spend some time discussing that today. We appreciate that one. Dr. Michelle. So I'm a landlord. Uh-oh. How do we help to remove him from the list? Just kidding. I'm a landlord. How can you help develop a good lease that will be beneficial for both the doctor and myself? So yes, you know, it's not uncommon that many of you may own your own real estate and therefore you are your own landlord. Or for those of you that might have recently sold, you want to maintain the property as a form of continual revenue, passive form of revenue post-sale. So yes, many doctors do fall into the world of landlords. So we do a lease creation service type thing, depending on the needs of your building corporation. Doctor, happy to discuss some of those scenarios as well, but it is very important for those of you that own your own real estate, very important, or in many cases, just as important, to have a lease separating the corporation that owns your building from your corporation that owns the practice. This, of course, is beneficial for taxations, liabilities, as well as obviously helps to increase the value of the practice, meaning making it easier to gauge the financials if there's two complete separate set of books and a lease that's well documented, fair and equitable market rents, as well as to describe what happens if you were to sell or to pass away or otherwise, and how it would look if you were to sell the practice. So happy to share some best practices through that as well. Again, continue to have those questions. We'll answer those as we go. So we're going to touch on some national updates, rent deferments, abatements, lease items to look out for. We're going to touch on practice acquisitions, exits, right? Could I walk away? Should I walk away? We've really continually have an increasing database of those looking to sell, those looking to buy. So I would strongly suggest reaching out afterwards. We're happy to collect and share with some of the internal trust. Of course, we're not brokers, real estate brokers or practice brokers, but we're happy to connect some of the dots from some of our clients. Also, another great question we have a lot of lately is how do I best structure the lease post-COVID? Right? What are some of the new starts, renewals? What do I look out for? And what's the glass half full? Because candidly, there could not be a better time, in my opinion, negotiating, especially for a new location. So looking forward to sharing some great best practices on that front. Okay, so national updates. So we're seeing some interesting components now. First and foremost, on both sides of the border, is the landlords as a strategy. For any of you that have asked the landlord for any sort of rent abatements or deferrals or help on rent, what we're finding is many landlords are just inundated, overwhelmed with these. So as a knee-jerk reaction, they say, great, send me all your financials, your personal tax returns, your corporate tax returns. And for many dentists, they don't want to share that information, rightfully so, you've worked hard for it. But there's two aspects. Number one is the landlord may have the right in your lease to require all those documents if and whenever they ask for that documentation. And for some, if again, for those of you following along in your lease, for those of you that it is in your lease, you may be held in default if you don't send them within a 15-day or 30-day period. So be cautious about just ignoring some of those requests. Many that I've spoke to said, oh yeah, they asked for financials, so I just decided to pay my rent. So it might not be that easy. So that's, again, a key piece. Now, most of the landlords we've talked to have no interest in going through a full review and spending any time on this, but what it is doing strategically is it's dramatically decreasing the amount of requests. So it's taking the requests from, call it 200 to 50 type of thing. And now they're much easier to help to deal with those handful of tenants that are still going down the path. So that's another component. So let's talk about rent deferrals. Rent deferrals is very common, that the landlords are still wanting to remain whole, but there's some great strategies that we're seeing working out quite well. So for example, doctors that may be still under a capital crunch or not opening or about to reopen, the positives is that most of the doctors we're talking to, especially throughout many of the southern US states, we're seeing a lot of doctors that are back up to about 60 to 70% of production and patient flow, which is fantastic. So again, from a positive, it's where we're seeing some pent-up demand. While it's not back 100% by any means, we are seeing by and large that most are back and most are feeling far more comfortable about covering costs and getting back to normal. So rent deferrals are structured usually as spreading out 1 or 2 or 3 months of rent and deferring them over a period of time, 6 months, 12 months, or other ways. So that's a core component. Number two is also the security deposit has been another sort of elegant negotiable, we call it, that if in the event that we have a security deposit, we could apply one of those back rents or one of the rents that are upcoming against the security deposit. So the landlord is whole, and then you'll have the responsibility, or maybe not, to replenish that at some point in the future. So a lot of success with rent deferrals. However, I will share some major caveats here, is that especially some of the large institutional landlords are using this as a great ability to dramatically change the core foundation of the lease. So one that we received from a major institutional landlords, one of the largest, upon the request for a simple 3-month deferral, the landlord sent back a 12-page lease amending agreement. And hidden in the fine print were 2 things. Number one was they then slid in the demolition right, meaning that the landlord, within 60 days notice, could serve notice to the tenant, the doctor, that they would be out due to any time at the landlord's discretion if their desire is to demolish the space and redevelop it. So that was hidden away. So imagine this, right? You're just asking for a little bit of help and to defer some payments, and the landlord comes back and slides in a demolition right, which quite frankly could evaporate the vast majority or potentially all of the value of the practice if we no longer have a location to work in. So that was number one. And then below, it also added some personal guarantees and indemnity language, meaning that if in the event the doctor was now to default, the landlord had the right to go after the doctor personally and personal assets as a result. So, I mean, I shake my head at times because while it's not surprising, for many of you it will be, but it's not surprising to see some of this type of language out there. So this is happening, and it's happening every day. And it is to your specific benefit to understand what's in your lease. And again, before you sign anything, I strongly suggest to send us a copy of the information and the lease and whatever's been proposed, and we'll go through that shortly. So again, for those of you that are following along, rent abatements, they're a little less likely. We have seen some examples where in exchange of a new long-term lease, the landlord's willing to give some tenant improvement allowance, in some cases free rent, 3 months of free rent, for example. So there are some abilities here, but there usually has to be something in it for the landlord is a key component. Also, some other big red flags. So again, for a big portion of you that have not been current on rent or weren't current or might have been in default and not been notified, very important that whatever is agreed upon is specifically in a lease amending agreement. Meaning that if the landlord said, you know what, pay me what you can, or worse, the property manager said, yeah, you know, send me what you can, and that hasn't been dealt with, then, you know, there's a high probability that you may be in default and might not know it. Because usually if you don't pay your rent within 7 or 30 days, you can be held in default. So we'll certainly touch on that. And then also we'll touch on why now is a key component. So we're seeing a lot of doctors hire us for acquisitions, also for relocations we're seeing a lot of, and many of the clients that have hired us recently have been asking us to aggressively renegotiate with the current landlord based on incredibly high rents that are being proposed. And if in the event it doesn't work out, to aid them in the relocation to a new location. Because certainly right now, many landlords are very, very anxious to fill their vacant spaces and are offering pretty incredible terms because they're very nervous about what's going to come in the near future. So now that we're moving in and what to look out for before we reopening. So there's a couple of components here. Number one is within the lease terms. So if, for example, you're making any changes to the HVAC, or we're adding in specific HEPA filters, or we're looking to make changes to something that the landlord owns, or we're adding in plexiglass, or if we're adding in some specific partitions, if we're making any space, cosmetic or otherwise, depending on your lease, you may have a contractual requirement to notify the landlord of any changes to the space today. So to really stress and reiterate that, you know, whatever changes you're proposing or making into the space, very important that the landlord is notified and aware, and that's found in the alterations section of the lease. So definitely something to look out for. Okay, the next key components to look out for too in terms of leverage, which we get questions with all the time, is, you know, what leverage do I really have with the landlord? And one of the last webinars we did, one of the doctors in the Q&A said, look, I have no leverage. I'm a practicing dentist, the landlord holds all the cards, and I have no leverage. So if you've ever had a fleeting thought of that, that is exactly what the landlords are wanting you to believe. Quite frankly, I believe that the dental tenant by far is the best tenant in the history of commercial real estate. That's my personal view. Why? Because you, as a group, have the lowest default rates of principally any other occupation or type of tenant. You also are typically there for about 26 years on average in the same location. Also, always paying rent on time, and also has the highest build-out costs of any other commercial tenant, which means that we have a great opportunity now to leverage that situation. And look, let's be candid. The dentistry clinic will never be able to work from home, right? Law firms, accounting firms, everyone now I think has gone through a unique premise of saying, why? Why do I need a physical brick and mortar to come to work at? Dentistry will remain the same. Retail is a key component. So again, I can't stress that how important that some landlords are now realizing that the dentist is the new anchor tenant. As people are ordering from Amazon Fresh and groceries and getting all these great services now, it's a whole new economy, in my opinion. So what does that mean for us as dental tenants? In my opinion, that's even better, right? Because we're never going to be able to work from home, with all the needs and the increasing requirements for health and safety, et cetera, right? So again, when does our lease expire? When do the options renew? Do we have options to renew? And also, who is the tenant? A lot of questions lately about liability, meaning, is it in your name personally or is it in your corporation? Also, a lot of questions we have recently is, look, hey, I'm in default. What recourse does the landlord have against me? And for some, if again, your lease, and I'm not going to do a polling question on this one, but if your lease is in your name personally, then that can definitely create a risk that the landlord could be able to come after your personal assets or otherwise, and or leapfrog over your corporation. And then of course, now as we look to monthly financial obligations, April and May rent, let alone June, with PPPs coming through, with loans coming through, we want to be strategic. So it is leverage, especially if those that have not making the decision not to pay rent. There's risk with that, but there's also leverage. So for those of you, again, with leases that are expiring or without options to renew, it creates a very unique opportunity to create a win-win negotiating with the landlord and to help reset rents to be aligned with current market rates. So let's touch on market rates for a second, because we do get a lot of questions on that. Is, well, Eric, why should I engage the landlord now if things are going to get worse before they get better, or depending on what the future has to offer? So there's a few reasons. Number one is right now, for some of you in separate states that are back to work and are coming back to a level of normalcy, we're finding some landlords are having quick amnesia, meaning they've forgotten all about COVID and now we're back to normal, you're open, so send me my rent, right? So for those that are still within the COVID and still experiencing some hardship as a result, it does create a very unique negotiating time frame that we can leverage to say, look, we're shut down, or we're modified, or we're only open in a select rate, and we need some help. And that gives us some leverage going through. And again, if, let's say, rental rates go down before they come back up, then there's nothing stopping us from, we're only bound to it once we sign the lease. So there's nothing stopping from renegotiating things in a non-binding way, right? As the economy changes, right, you can always reset or revamp proposals or otherwise, depending on the market. And again, lots of different people in lots of different parts of the US on the line, et cetera. So we'll touch on some uniqueness, but there's also some good strategies in terms of rental rates that to fully leverage the PPP to pay for May and June, or May and June and July, depending on if you how much you received for the PPP. And then also important, because as you're renegotiating the leases, also common to ask for some deferrals after the PPP is paid. So we've had some success looking through August, September, October, and negotiating some deferrals after the PPP expires. So it gives more time for capital preservation. Again, for those of you on, feel free to add some questions as we go, especially if this is pretty pertinent to many of you. So default. So most of you have paid your rent on time, which is great. But again, if we didn't, if we missed, there's a number of components we want to be aware of. So I've pulled up a few here. Again, for those of you following along and you have your lease in front of you, feel free to email us if you have any questions on any of this, or it looks like Greek or hieroglyphics to you. We're happy to have a complimentary review of your lease, info@cirrusconsultinggroup.com. Many of the members of my team are standing by to assist. Number three is default. So the question is, what are the default provisions within your lease? If you are in default, does the landlord even have to tell you? And if they don't have to tell you, is there a cure period? You have a certain number of days to fix it or not. And what happens if you've missed that? And again, many states and areas have protections, so the landlords can't do evictions. but that has a specific time frame. And my concern is what happens after that expires? What happens after that date? If we are still in default or in continual default, what does that do? Well, for many of you, your options, the ability to renew the lease, typically a 10-year term with 2 5-year options. Those 2 5-year options are usually predicated on you not or have not been in default. So that you could lose your options to renew the lease. In addition, there's the landlord termination right. So for some, and we've seen those letters, landlords are using this as an opportunity to change the mix of their tenancy. And for some doctors that they've been waiting to get out or others to move into that space is a big challenge because, right, as a result now, the landlord could, right, hold you in default and terminate the lease. Now, is that going to happen in every case? Of course not. But, right, why take that risk? Again, as I mentioned before, personal guarantee exclusivity is another big one. Right? Some landlords can be using it as an opportunity. If you've negotiated for exclusivity, that in essence means that you have the right to be the only general dentist or specialist or ortho in that particular space. Now, if in the event we are in default, we could lose that exclusivity and potentially a corporate practice could therefore move in next door, right? All because of missing a month or 2 worth of rent. So again, very important to get things documented. If there has been any rent abatement or deferred offered, very important that that gets structured in a proper lease amending agreement and well documented, so it's nothing that can bite you down the line. Also, a lot of questions about what if my landlord goes bankrupt? So if that's the case, very important to have a subordination non-disturbance agreement. And what that in essence is it allows your lease to be subordinate to the mortgage. So if, right, in the hopefully unlikely event the landlord does not go bankrupt, then if in the event they do, then it would give you protection that your lease, that the bank can't come in and just tear up the lease, or the new landlord can't come in and tear up the lease, that your lease is subordinate, protected underneath the mortgage. And the assignment, the ability to sell. All right, so a lot of questions here about buying and selling, and what does that mean? So let's talk about that now at a high level. So a lot of questions lately. So for those of you that have contemplated selling in the past, there's a little bit of regret in my experience, talking to many of you recently, that, geez, I only wish I took that offer or maybe thought of selling prior to COVID, and now what's my practice worth? So that's some of the difficulty in financial modeling. You know, it is very, very difficult to assess what the value is and what it's going to be in the future based on COVID. So let's call it a COVID variable. It will be a function of how quickly we get back, how quickly we ramp up, and what we see for patient attrition and how we ramp up as a result. But there's 2 basic categories. There's those of you that are saying, you know what, I am at the end of my career. This COVID is just the straw that breaks the back, and I've been winding my practice down. I just want to walk away, right? Or others now that say that, yeah, I'm in pretty good state. I'm really not enjoying this PPE. Many that got to, you know, were practicing with actual wet finger dentistry in the early 80s, as my godfather and others did in the many, many moons ago, to now be in full PPE and the heat and otherwise is obviously incredibly difficult. So many are not willing to make the switch, and we're seeing a lot of people looking to exit. So, but the question now is when and at what value. So many are coming back, ramping up production in pure preparation for sale. In either of those cases, the lease becomes critically important to either I want to walk away or I don't. If you're wanting to walk away, first of all, you know, I understand the emotions involved behind it. But again, you've invested so much time, energy, and effort. I can't stress enough the importance of looking to see, because it is a value. Imagine a new associate that's able to move into a fully built out dental practice, especially with charts, versus spending a couple $100,000 at $150 a square foot to build out a new practice from scratch with medical grade plumbing, electrical, etc. So there is value there. So be conscious of that before you just say, I just want to walk away and be done with all of this. Try not to be emotional on it. Also, be careful, because if you want to walk away, you may, through the surrender or restoration components within your lease, have the responsibility to return it or remove all leasehold improvements, including, but not limited to, your trade fixtures, as well as any walls, plumbing, electrical, and to pre-dental condition. So very important you're aware of if that is in your lease or not. And if it is, if I was advising a doctor acquiring your practice, I would say that it's probably worth about $5,000 to $10,000 less, purely because you're now, the buyer, is taking on the liability because of your lease to return things to pre-dental condition if they were to relocate or walk away. So have a plan and make sure it is aligned to your lease. If you're looking to sell in the foreseeable future, for many of you that have sold before or bought, you know that the banks now are they're high requirements. They do not want to issue a long-term loan without a long-term lease in place. So meaning that if, for example, you want to sell your practice for $1 million and the new associate wants to buy it, but there's only 1 year left on the lease, or 1 year left on the lease and 2 5-year options, but the options are personal to you or to your corporation, meaning they're not transferable to your buyer. So they're only good for you. So the buyer only has 1 year left. That, in our experience, will not meet the credit requirements of the borrower, and therefore becomes incredibly difficult and limits your buyer pool as to whom you can sell to. So term and predictability can become a great benefit upon the sale of your practice. So therefore, depending on your goals and objectives, could be a 5 or a 10-year term, depending on when you're looking to transition, with 2 5-year transferable options, gives the new buyer a lot of predictability and continuity to the future. Okay, so just to quickly summarize here, and we'll go to some more questions here momentarily. Again, I encourage you to go to the Q&A section as a result. But ultimately, why is it so important right now? Number one is, again, the lease dictates all. And if COVID has taught us anything, is all the stuff we never thought would happen to us is now happening to us. So we've found that most doctors are very aware, want to be aware of the risks in their lease, and they want to do something about it quickly. Number two is that a failure to pay the lease could be catastrophic and could put us in default and could be a significant issue. So for those, many of you on the line that had not paid, there is some silver lining there, but we want to be very, very careful. It's a fine line on how it's done, and it's certainly something you don't want to do without a well comprehensive plan. So definitely from that perspective, if you have not paid your rent in full, definitely request a complimentary review, and happy to personally, or one of the senior members of my team, to discuss that strategy with you, and how to sort of dig ourselves out of that tricky hole. Obviously, it's incredibly cost prohibitive. If we were forced to relocate right now, what impact would that have, right? How much would it cost? So be cautious with that. Very difficult to move, obviously the practice sale, right? But ultimately it gives you leverage. And if the vast majority of other doctors or other tenants today have not paid their rent, and you are putting forth a new 10-year term with 2 5-year options, well, again, if you're getting 2 phone calls from 2 tenants, one that says, I can't pay my rent and I won't pay my rent, and the other from the dentist that states that due to COVID, I've been contemplating the long-term growth strategies of my practice, and I'd like to submit a new 10-year term with 2 5-year options to structure a long-term lease aligned with my goals. So you're the landlord now. Who are you going to respond to first? Okay, I see a lot of people have recently joined midstream, so I'll do some summarizations toward the end. How do you structure those leases? So this arguably is one of the most important slides of today's seminar and course. So here's a lot of things we're seeing. A lot of questions are, Eric, are you and your team adding in new language based on the pandemic? So the short answer is no, but we've learned a lot, as we have for 26 years of intellectual materials. When we're the firm, when stuff hits the fan, we're typically the first phone call. So while it's not possible just to add in COVID-19 language for all leases, we are able to make some significant improvements to other sections, especially for new starts, that have greater impact if in the event there's state of emergencies or unforeseen delays to opening. That's number one. Number two is the alteration section. So yes, very important that, within the alteration section, we're aware. If we're looking to make plexiglass changes, put up some walls, add a door, anything of that nature, or compartmentalize the space, please make sure you're aware of what's in your lease. Most of you cannot make even the most minor of changes in the space without the prior written consent of the landlord. This can be due to fire hazards, insurance. There's a whole host of reasons as to why the landlord needs this. And if you have made changes without the landlord's approval, right, that is another potential for default. So as mentioned before, a fixturing period. So if you are building out or expanding onto your practice, a few things. Number one is the period of time between the possession, when you get the keys, to the time that your lease commences and you're open for business. That's the fixturing period. That should be completely amended now with COVID type language, that if in the event there's a second wave or otherwise, right, that you are not forced to opening up a clinic that you cannot physically open. So there's some certain language through there that gives some termination rights that, again, if the landlord hasn't delivered you the premises or certain details within a certain period of time, then that can also be a cause for termination to give you more flexibility and more exits, more protection. Continuous operation. So then again, this is a big challenge that many doctors have a continuous operation clause, especially if you're in a mall or with some of the major home improvement stores and those type of malls. Very likely that you have a responsibility to be open from 9 to 5 Monday through Friday or otherwise. And that can yield a big issue because you can be, and many of you have been held in default because you haven't been open during COVID. And that might seem asinine to you, but unfortunately it happens. And landlords do this to either increase security deposits, or we had one that needed to pay accelerated 3 months of rent. So it's just made it a bad situation worse. So again, important that we know. The assignment language, of course, very important. Can we sell the practice? Whom can we assign the practice to? Demolition, relocation. Many doctors aren't aware that hidden within the lease agreements, Article 46, there the landlord has the right that at any time with as little as 30 days notice has the ability to relocate your practice from one suite to another in their building or in their portfolio of buildings. Death and disability. So this is another big one. Many of you obviously very concerned with COVID and otherwise, especially those looking to transition in the future at higher risk. The death and disability clause, I cannot stress enough, should be in every single dentist lease. What it is at its core is an early termination right that needs to be carefully worded and be dental specific. That in essence says, if in the event you, heaven forbid, pass away or have an inability to practice wet finger dentistry, right, that you or your estate has the ability to terminate the lease and be absolved of the remaining payments, or to be not held in default if you, the named tenant, are no longer there, which can allow your estate, your husband or your wife or otherwise to be able to renew the lease on your behalf, right, which might be required as a component of sale. So that is certainly very, very relevant. Okay, so death and disability, very important. Everyone should have that in, especially in their upcoming negotiations. Overholding, so be cautious if your lease is coming due and you're in a month-to-month status. Critical that at the end you note that your situation is urgent when you request one of our complimentary consult calls, so that we're very proactive with that. Because if you are in a month-to-month, many landlords can increase rent by 150 or 200% of base rent, which is obviously a major issue. So that's the overholding or holding over section for those following along. Personal guarantees we discussed before. We have a high degree of success with having either removed them in its entirety, if you especially have been a tenant for a long period of time, or to dramatically limit those, or to make sure that they're not continual liability which happens even after the sale, which I'll touch on shortly. Also, we're seeing a lot of landlords now go through their books and are charging back clients. Doctor in Northern California recently got a bill for over $36,000 because their landlord changed hands. The new landlord came in, attorneys ripped through the leases and found that the landlord had the right to be billing them at triple net and had only been billing them based on a modified gross basis. So they were able to back bill a whole bunch of back taxes. And the tenants were then hit with this major, in some cases over $30,000 worth of back bills. So be cautious about what's in your leases today. Lease performance we touched on, financial statements we touched on as well. Okay, so as we get to questions here, the assignment section. So in the essence of time, we'll just cover on some of the tops, but this is in 70% of dental office leases for those on this call and those throughout the comment. So this would be very similar to what is found in your lease agreement today. So the assignment section is specifically structured to determine if and how you're able to sell your practice, because as many of you know, you cannot sell your practice without the ability to properly transfer the lease agreement, right? So typically in the agreement of purchase and sale, it's predicated on financing as well as the ability to transfer the lease. So this section is what's most important. So this is what we've pulled from a recent lease. If the tenant should wish to assign or sublet the lease premises, it shall first have received the consent of the landlord, which means that, to be clear, you cannot sell your practice without the landlord giving prior written consent. So the second orange section here, that the landlord shall have the option to either A, approve the tenant's request to assign and sell your practice, or 2, say no, I don't like the cut of Dr. Smith's jib, and the landlord says no, I don't want you to sell your practice, or 3, to terminate this lease agreement on the effective date of closing. So can you imagine, right? You are 65, 75 years of age, you've had a long, hard career, you're coming to the point where eventually you're looking to sell, you're producing at $800,000, you've got an offer for $650,000, and you're located just outside of Manhattan, for example, right? And the landlord, you've got the broker, you've got the buyer and seller together, and you've gone through all the back and forth, and in the end, right, now you have to transfer the lease. You reach out to the landlord takes one look at the application and says, no, I'm not allowing you to transfer your practice. Right? So think about that. Not only can they prevent you from selling, but they can also require you now to have terminated your lease. Right? Imagine that. As an end result, you're now sitting without anything to sell. Because let me ask you the question, how much is your practice worth if in the event that you're being forced to and no longer have a lease? So if you can't transfer your lease, then what is your buyer able to buy? And how much is your practice worth, again, without the lease? So very important that, again, it's structured to allow for a clear transfer. Also, some interesting language at the bottom, I'll save that for another day, but in the event through here that if you are to sell, the landlord may be entitled to a percentage of practice sale proceeds. So they can deem that it is their location. It is not, in fact, your space that is specifically required to, that is the value of the practice. So we've seen many examples from lawyers or otherwise that have sent us these that from clients that basically state that they will not transfer the lease without a check. We had one recently over $120,000 that the seller was requiring just to transfer the lease. So, okay, so what do we do from here? So just to wrap up and close, the big takeaways from today are time. One of the most important things you can do is start the lease negotiations early. We typically suggest, and we have found over the past 26 years, that starting the process about 2 years out maximizes your leverage, right? And it, first of all, keeps the landlord on their toes. They know it can be upwards of 18 months to relocate a dental practice. So the earlier you start the lease negotiation process, the better. So if you start 24 months out, now, a lot of questions. Eric, how do we get the doctor to the landlord to the table? We wait, we try, we've reached out, right? That's what landlords do. They wait. Oh, I'm golfing. Oh, it's COVID. Let's wait. Let's wait till 8 months pass. And then suddenly we're 6 months prior. Now we're desperate. We want to be able to, sell and transfer the practice, or now we've only got 3 months left, our options renew deadline is coming up. It's a major issue. And in some cases, landlords won't start the process until after the option to renew deadline is passed, which again is a major issue and leaves us completely exposed. Because if that's the case, then your remaining 5-year option or 2 5-year options become null and void. All right, so again, what are we thinking? What are we finding that's working, and how does this benefit you? So a couple of components here on your screen. Again, for those of you that are on the line, I'll walk you through it. So first of all, we need to be thinking about the WIFMs, right? What's in it for me? Both from the landlord as well as for the tenant. So what works? So principally for many landlords, their banks and lenders are looking to see who's paying rent and what receivable revenue they have, meaning what long-term leases are in place. And if the majority of the building is in short-term leases, then that's a problem, because that doesn't give much assurance and continual revenue for the landlord. So long-term leases, landlords care about typically term and rent. So those are the two main things. So how do we leverage that, right, to our benefit? Number 2 is, when does your lease expire? The approach, let it be as an advisory service that we do or a full lease negotiation, it really is heavily impacted on based on when the current lease expires. So again, for any of you that have a lease expiring within the next 2 or 2.5 years, I strongly suggest sending us a copy of the lease, happy to review it, and talk about strategy and options on how to take advantage of this unique negotiation opportunity. Also, tenant improvement allowance. If you're about to invest $10,000, $20,000, $30,000 due to COVID to improve your space or change it from open bay to more condensed or individual or positive airflow type of situations, my suggestion is don't invest a penny before figuring out the lease. Because if you're about to spend $50,000 and your lease expires in a year or 2, well, what do you think your landlord's going to do when the lease comes up? Are they going to negotiate with you? Or are they going to say, you just spent 50 grand on your space, you're not going anywhere? So be cautious. Think about it, right, from a business perspective, and how do we leverage that? Rent deferrals, rent abatements, we touched on. That's a key component in the short term. And ultimately, the key takeaway is just don't wait. Take action now. The earlier you're able to engage the landlord, the earlier the benefits of taking advantage of COVID, and in some cases, some of the landlord's desperation. It is a very unique time to take advantage of, both for lease renewals, long-term lease renewals, very effective at helping to reset some of the financials, as well as new starts. Right? A lot of the clients that have hired us recently are starting up new practices. So financing rates have never been lower in our lifetime. Equipment and supplies, incredible incentives right now for those of you looking to equip and buy new gear. Definitely reach out to some of your partners because there are incredible deals. And of course, construction costs and landlords, many cases, are desperate to fill some of those vacancies. So for those of you that are similar, like-minded, entrepreneurship type opportunistic, it is definitely and could be an unbelievable time to finally take the plunge to relocate the practice. So happy to discuss those further. Before you do anything, make sure you have the data. We track over 95 billion square feet through our proprietary software. We can pull up building reports, some basic title searches, demographics, vacancies, rental rates. If you have any concerns about are you paying fair rent, shoot us a quick email or fill in the polling questions, or when you exit, there'll be a little part to request a specific lease consultation. Ask for it. We're happy to review the fair market rents and go through to see if you're paying fair market rents today. And ultimately, how do we gain success? What have we figured out over 26 years? It's this. This wheel is the process we do to help ensure the successful lease negotiation. So number 1 is Doctors, if you don't have a digital copy and a countersigned copy from the landlord, request it today. It's typically required for PPP or other loans anyways. Ask the landlord for a countersigned or executed copy of your lease. If you have a lease that's only signed by you, unfortunately, it's not worth the paper it's written on. If the landlord hasn't agreed to it, right, we need to have whatever the final and documented and governing agreement is. So get that ASAP. Just a quick email to your landlord usually does it. Number two, identify your practice and career goals. What do you want to accomplish? When do you want to transition? And what's most important to you, to your career and the lease. Number three is have it professionally reviewed. Make sure that you're aware of what's in the lease. Number four is get the data. Find out what the comparables, how do you know what fair market rent is? And number five is figure out what the end goal is. What do you want to see? What does success look like for an end result? Is it financial wins? Is it reductions of personal liability? Is it the ability to sell the practice? Before picking up the phone and calling the landlord, which unfortunately is what everybody does first, right? At this point, we haven't. We've gone through 5 stages before we picked up the phone and called the landlord. And unfortunately, what do most doctors do? The very first thing they do, they get off, they pick up the phone and they call the landlord. So my strongest suggestion is get all the facts, figures, plan, and then reach out to the landlord to negotiate the financials as well as all the business terms. And be prepared, right? One of our main advantages over 26 years is that when the landlord says no, right, we have 7 or 8 other ways to gain significant benefit and still be a major win over what we have today. And then in the end, make sure that you get a final executed signed copy of the lease. So that is the main components for today. I'll keep this open for some additional questions and answers. Again, an appreciation for everyone's time. We have a questionnaire that just popped up. So we are doing a complimentary lease review due to COVID. Please fill out the quick survey. Are you presently a tenant with a lease today? If you are a tenant but don't have a lease for whatever reason, I would put yes to that as well, based on Adrian, your question earlier. Number 2, when does your lease expire? So that's relevance in terms of urgency and leverage. Is it within 12, 24, 36 months or more? And then please, in terms of prioritization, we have had more lease review requests over the past 2 months than we have in years. So please, if it is urgent, we'll prioritize that accordingly to help move that forward. So denote if our Article 3 here, if it's urgent. Number 4, right, if you'd like to schedule that complimentary lease review or rental rate analysis. And number 5, for those of you that are glass half full, looking to start or buy a new practice in the next 24 months, strongly suggest obviously putting yes to number 5 and requesting a quick call as well. Okay, so I'll give that another minute to go through. I see that everyone is still on the line. So again, in the questions and answers, I strongly encourage to type in some additional ones if you have any questions on the content today. So here's a good question. In my specific state, now we're seeing that we're able to open up for emergency services as well as basic dentistry without hygiene. How do I negotiate with my landlord if I'm still receiving a significant reduction in revenue? So great question. So it's relevant for all, right? As we're reopening back up, our fixed and in many cases variable expenses are increasing. So how do we leverage that? And part of it is leveraging out a clear strategy with the landlord. If we're not open at full capacity and we're receiving hardship, then that is definitely leverage. So we can go back to the landlord to say, look, we want to be current with our rent. We want to make our past rent payments and be continual, but we need some help. And in exchange of some short-term help, rent abatement or deferrals, especially if your lease is coming due, it could be a great opportunity to be negotiating a new long-term lease with options. So there are certainly some leverage through there, both in the short term. For those of you that are 2 years into a 10-year term, there's still, right, you're still a great tenant and still ability to be negotiating for some deferrals or some additional cash preservation techniques that we're doing across the board. Another question here for some federal incentives. This is, I believe, Canada specific with the CECRA, which in essence is a federal incentive that is for the landlords and the tenants to apply to, but it must need the landlord's approval, of which the government is willing to pay half or 50% of the tenant's obligations. Landlord is expected to pay 25% of that rent, and the tenant is responsible for the remaining 25%. That, of course, to the US listeners sounds fantastic. Unfortunately, many landlords are not taking the government up on this incentive, and it's still deemed a voluntary program, which is a problem. Many landlords would rather hold on and take the risk to get 100% than to give up 25%. So it is unfortunate. We are monitoring it closely. One of our attorneys was very active with helping some of the lobbying committees through some of the Board of Trade to help get that into action. Unfortunately, I think it'll probably be adjusted to be taken more advantage of. There are some major institutional landlords that are starting that program and doing it, which is, again, could be a good advantage. Before you agree and sign, though, definitely important that we discuss strategy. Okay, last but not least is all my contact information. We've run a few minutes over, but obviously lots of good questions here. My contact information is here. Feel free to give us a call or email us at info@cirrusconsultinggroup.com. That'll allow us the opportunity to structure either with myself or one of the many members of my senior consultants on the team. And looking forward to seeing if and how we can help support. So on that note, I will keep the question and answer section open, and I'll keep that open for a few more minutes. So feel free to type in any additional questions. And I'll post a few of these as well, and I'll keep that open momentarily. If not, I certainly appreciate everyone's time. Looking forward to assisting in any way we can. And again, you're not alone in all of this. The first step is at least understanding what's in your lease. And then number two is how to make sure that we're not going to do anything post-COVID, rushing to reopen, that might have a significant impact on our lease moving forward. So on that note, I will pause there, keep the questions open, and thank you very much for everyone's time.